The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We got the S&P is currently up 18 points with the Russell up 16 on the day. We have NASDAQ up 35 with the Dow up 161. Oil was up $1.40 on the day. Natural gas surprisingly flat. Looking over at corn, it's down 8 points. Soybeans down 9. And heading on into the Forex pairs, we got Euro dollar up 43 pips. Aussie dollar screaming up 106. Pound dollar very quiet on the day at the moment. Had a little bit of volatility earlier. Looking on over at dollar CAD down 26 pips. Dollar franc up 3. Euro yen is up $1.14. Pound yen up 91 cents. US yen up 59 cents. Looking on over at our metals, we got gold is currently up $32 and make that $33 right now, bouncing up and down right there. We got silver is currently up 1% on the day with copper up 3% on the day. A big copper move day. And that gives us our current market forecast. And we were looking at some potential trades. We talked about these. We talk about these each week. And let me pull this up for you right over here at TFNN.com. If you haven't already, make sure to grab yourself a Nadex account. Go to TFNN.com, click on the Nadex banner logo right there. It'll bring you right to the Nadex's website. And once there, you can grab yourself a demo account. Click on Why Nadex. And after you've clicked on that, I'm sorry, not Why Nadex, but there's a lot of good reasons. Segregated funds, regulated exchange, U.S. residents. It's actually legal for U.S. residents, where pretty much everybody that's doing binaries that's not retail focused is not. There's a CBOE. They have like SPX and VIX binary options, but they've had like 300 volume on their contracts in the last 30 days. And then we have one expiration a month versus, I don't know, there's 21 expirations in a day on Nadex, thousands of contracts traded, and thousands of unique contracts traded, and plenty of liquidity for you to hop in there and have some fun. And you can make money in flat markets and volatile markets and trending markets. Their fees are capped at $9 an order, so it's 90 cents a side. But if you do, let's say, 10 contracts, it's $9. If you do 100 contracts, it's $9 per order. So pretty sweet that they cap that out. They also have a Android, an iPhone, and a Windows phone app that you can download. To get a demo account, click on Our Products after you're on the Nadex website, and then click on Demo Account. Fill in your username, your first name, your last name, your phone number, and your email address, and then click Apply for Demo. You'll be able to access your demo account in about 15 seconds. Go over, check your email. You're going to get an email from Nadex with your password so you can log in. You'll just click on the Login button right here, and they'll give you $25,000 of funny money that you can play with. Fund an account with $100, and you can get that account, that demo account, extended for 12 months just by a simple $100 deposit into a live account. To get a live account, go to Create Account, and then click on Start. Once you've clicked on Start, fill in the information. It takes about 5 minutes to go from start to funded to give you access to live trading. Again, there's only a $100 minimum deposit required. There's no platform fees. There's no data fees. There's no minimum trade requirement fees or nothing like that. Okay? The only fees they got are exchange fees, so that means there's no broker fee on top of the exchange fee. And so that saves you a lot of money there. And anyway, so get that going. Then log in to your demo account. You can get in there and you can start trading right away. And check this out, get massive leverage. I mean, sometimes we're talking like 1,000 to 1 leverage, but defined risk. So I go in and buying the euro dollar for $30, a mini lot, versus a couple $100, and you can't lose more than, say, $30 on that trade. It depends upon what trade it is. Once you've done that, you're going to want to learn a little bit about Nadex. So check out their YouTube channel, youtube.com/Nadex. Also, check out our scanner. And you can get that over on the TFNN website to sign up for the Diagnostic Box Spread Scanner. And we'll get you going quickly. But let's go ahead and pull it up and see what we got And we'll also go in and just look at the news that came out and see how we might be able to use that to our advantage. So you can know how to use it, to your advantage, right? And put the different pieces together. And once you log in, you see the scanner. Let me pull that up. You'll be able to see exactly what it looks like right over here. So right here we can see the spread scanner and the binary scanner. And we had a few different news reports come out last night. And or I guess early this morning were really the important ones. One of them was the pound dollar. The pound had its manufacturing PMI report. So first, let's pull that chart up. Let's look at it. And let's see what could have been done. Right here, let me change this template up to my regular website. There we go. Okay, now let's hop on over to pound dollar. And I've just had some great moves today. But can you look at the chart and guess maybe when the report came out, all right? So it comes out at 4:30, and what's really interesting is there was a lot of volatility previous to the report coming out. This is one of those reports I do not butterfly. Like, I'll do butterflies before reports on Nadex, where basically I'm choosing a range-bound strategy if it stays between the range. This is one of those that I won't butterfly because it's too volatile to butterfly. I'll get nailed if I try to butterfly a pound dollar before the pound dollar event. And let's see here, like I was looking at the ranges on it, and what I found out. Let's see if I still have the stats. Maybe I can pull them up here in a couple minutes for you and go through them. But let's see here. What do we got? Pull up this stat, and then I'll let you know what the range is. Like, why did I choose not to butterfly pound dollar? And sorry, one more minute, and I'll have the stats ready to lock and load here. All right, so right there, what we got is we have the pound dollar. I was looking at the UK manufacturing PMI. Now, the report actually comes out at 4:28 because it comes out for Reuters data subscribers 2 minutes earlier than it does for everybody else. So you can get a little more volatility. You'll actually see if you go in here and break this down to 1 minute charts for just a second. Back up. If it'll let me. Come on there. All right, so let's wad it out a little. So right there, you can actually see, start getting a little bump, like boom, before it takes off. It actually flies up just a little bit, just a few, like 10 ticks, but like right before it, 4:28. That gives you a little indication. Things probably going to go up. Okay, come out 4:28, and you see it pop, and then look at 4:29. You actually see this massive move, and then at 4:30, then it trends a little bit further. So you can see the move actually happened right there at 4:28. Pop, bam, for the next minute, and then it took its time. It took about 5 minutes to continue moving. What were the expected moves before and after the report? Well, let's back out. Let's look at it and see. Right over here, we can see is we had an expectation previous to the report that the pound dollar could move as much as 58 pips for an hour and a half before the report. And so if we go and look at the high to the low, and I'll zoom in on this section right here. Just grab that section. Maybe a little bit tighter. Right there, and then it ought to be a little clearer for you here in a minute. And I'll just go back to 10 minutes. It's a lot easier to hop around a 10-minute chart. Okay, so right here we're looking for 50. Like I said, about 58, 60 pips on the pound dollar. The pound yen is like 70 pips. And at 4:30, so we're looking at 3 a.m. And so if I go over here and I go, okay, well, when the report technically came out, right here, and then go up to, what do we got, 3, I guess 4:30, so 3 o'clock. It's our highest bar right there. So we'll go right over here. We got 45 pips, so that's not too bad. So it's a little smaller than the normal move previous to it. But, that's why I don't butterfly it. It's just too volatile. That big pop down before the big fly back up there is the thing that makes me very, very cautious about doing this trade. Previous to the news. Now, going into and doing a straddle on the news, I was looking for a move of about 60 pips from low to high, 60, 65 pips from low to high on the pound dollar. I can go over here, and I can see like right before the news came out, Basically right here, and for our low to our high, now I'm looking for 2 hours after, so 6 o'clock would be the latest point. And what we can see is we got a move of 62 pips. So pretty much right on the money. And so I'm looking for, like I said, 2 hours after the news report, and that was our highest point. We could go to 6:30 to be, if you want to be really technical about it. But obviously it didn't go higher than that after 6 o'clock. So we were right on there. We got 62 pips. We were looking for 60 pips, so it moved exactly the average that was expected. Now, as far as the number that came in, the forecast was at 51.3. I was looking for ideally a 53.3 or 49.3. If it did that, I'd expect much, much larger than the average, like double. I'd expect like 120, 130 pip move. But on average, I'm expecting 60 pips. And so if I know my averages, then I can play on those. I can take profits at those levels. I can know what my appropriate risk would be. Okay? Now we can do the same thing over on pound yen. Let's look over at the pound yen. And by the way, after that report came out, pound just really went flat. So we just got pure choppiness. It's just been literally bouncing up and down. Perfect swing trading, right? So right down into settlement, I'm back up to that high, down, I'm back up, down, I'm back up a couple times. And I look usually for like a retracement method back to the, for another entry, back down to the entry price. But it didn't pull back 60 pips. It only pulled back about 30 pips. So we didn't really get a retracement entry on the trade. Now let's look at pound yen, because that was a little more, I guess you could say preferred pair, because it's more volatile. And pull that one up. Now the numbers we were looking at for the pound yen was around 70 pips move from pre-release to 2 hours after the release. And that'll take just a second here. We'll get that one up. And then what other report? We also had the U.S. ISM manufacturing report come out this morning. So we got that one out. So right here we got basically pre-release 151.19. And let's see if we were able to get our 70 pips. And we'll draw this on up to, and people always ask me all the time, they're like, why don't you have the deviations on the pound yen? I'm like, well, because we use, the main reason is because we use implied volatility. And the pound yen isn't on the CME for me to pull implied volatility out of the options prices. So that's why I don't have it. But I have figured out how to put together the implied volatility for it using the pound dollar, the dollar yen. So I'm working on that right now. Once I get it done, then we're going to have a lot of cross currencies added in. And so here in the next 90 days, we're adding in all the stocks and a lot of cross currencies and 40 futures. So we got a lot coming to add to our deviation levels that we post every day at 8:15 p.m. Eastern time. We're going to move about 64 pips from the range, the low to the high there, right before to after the news announcement, 2 hours after the news announcement. And so that's pretty in line. We usually expect an average of about 70 pips. So we didn't quite get our 70, but we did get, we got 64 of the 70, so that's acceptable. When we come back, we're going to go ahead and look at the U.S. ISM manufacturing report and look at the stats on that, see how that played out. And we'll talk about the announcements that are coming in the next 24 hours that you can take advantage of.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Now, we had another report come out this morning. That was our big report here. We're talking about the U.S. ISM Manufacturing PMI. Got released this morning at 10 o'clock. And markets were waiting on that report and then got a little choppy and volatile in the process. And the number came out as a forecast of 50.6 with an actual of 50.9. I was looking for it to be a couple points off of that, like around 52.6 or 48.6 to have a big move. Nevertheless, we got a decent move off the report, not as much as I would have liked to have seen. And with that lack of that move, I probably would have been looking to back off pretty quick. But right here we can go back to when the report came out at 10 o'clock. And from a low to a high on the euro dollar, I was looking for about 61 pips. Now, we do have to look at the range, not just from when it came out, but the low to the high. And so over here, what we can see is 10 a.m. And it came down a little bit first. I saw a little dollar strength on it. And then it ran on up here to the 0.7. We got about 54 pips. So not too bad. I mean, like I said, the average is 61. 70% of the time the euro dollar breaks 50 pips. Within 2 hours. So for the last 2 years, it's broke 50 pips within 2 hours. So it kept stayed within its average of breaking out of that 50 pip range. Pardon me, but it did not hit the average 61 pips that it usually does have. Now that average, of course, is going to be skewed a little bit because you're going to have ones that explode that go like 100, 150 pips or whatever, some big surprise. Like if we get a divergence, like the one I was hoping for, or if we don't, then, we're basically expecting that 50 pip move because 3 out of 4 times it's going to hit 50 pips. So, At least that's the historical stats in the last couple of years on the U.S. ISM manufacturing report. So we did get that, but since the number wasn't off, then we're looking really to get out at that 50 pip mark because the probability was so high that it would hit it. Now there's one pair that doesn't hit it that often at all. There's actually a couple of them, but the range is still decently wide. So let's go ahead and look at those. It's sort of interesting to check out. We'll go ahead and look at, say, U.S. yen, and it's one of the least volatile pairs out of the group that can be traded for this report. In the last 2 years, it's only broken 50 pips like 17% of the time. Now, when it breaks it, it really breaks it. Its average move is like 47 pips, but that's also why it rarely ever breaks through. So let me pull it up. We'll see if it stayed within its stats. I'm sure it did. And this is like a pair that I'd potentially look at butterflying due to how little of the movement it had. So we go from the high, and then we go right down here to the low right at 12 o'clock. See if we stayed in that range. Yeah, we only had 28 pips. So it's one of the least volatile pairs. It breaks out of 50 pips the least amount out of all the other currency pairs that I've tested. So that'd be like a pair that I might butterfly into the news. Okay? Now, as far as before the news, I could do the same thing. Right? So before the news, I could go and I could look to butterfly. Well, say 30 minutes before the news, it only moves about 15 pips. Well, let's see, did that hold up true today? Well, right here, we'll do 20 minutes. We'll get a little extra time. That point right there, we got 7 pips. Okay, if we go 30 minutes, I mean, we definitely got it. I mean, this bar right here, the high, that's the low. So we got 8 pips. If we go an hour before, and by the way, we're looking for 17, so if we go for like 25 pips, that's 60 minutes. So if the news report comes out at 10, we'll take this all the way back to 9 o'clock. We'll find the low. We'll find the high. We got 11, so we stayed well within that. And we can go over here and we can look at what about 90 minutes before? Because 90 minutes before, the range, the average range is about 31 pips. Did we get that volatility at all today? We can go over here, we can go, okay, well, what's the high? Really, it's the exact same high and low, so 11 pips. So perfect butterflies into the news at 90 minutes, 60 minutes, and 30 minutes before. And you could also do these on other pairs. That would be my preferred pair because it has the least volatility and the least times that it breaks out of 50 pips. Now, there is one pair that has a little bit less pre-market volatility, and that's the Aussie dollar. But I like the fact that the US yen had less post-market volatility. So sort of the combination of the two sort of led me to be a little bit more drawn to that one. Let's go ahead and just, we'll check out the Aussie dollar. Now, it's been trending like crazy this morning, but let's look at it up to that news announcement because that's what these stats are about. I came up with the butterflies a while back, doing the binary butterflies on Nadex. I mean, obviously I didn't invent the butterfly idea, but using it on binaries was a new concept that I came up with, and I do education for their exchange all the time, and I've really just been developing this thing over time, and what I came up with was like, hey, I didn't know when to do it, what to do it on, how far and how wide to make it, and the only way I could consistently figure that out, because it wasn't a Monday, Tuesday, Wednesday thing, it was an event thing. So when news is coming out, the same news report, how volatile is the instrument leading up to that time frame? And so I can see, like right there, what the width was, 30 pips, and I'll come back to this when we get back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we're looking at the Aussie dollar, and the expectation on that was actually a 28-pip move before the announcement came out, and for 90 minutes before we got that 28-pip move. So, I mean, it stayed right within its expected range. So if you would have hopped in, you would have done, say, a butterfly with 28 pips on either side after the news, and you could have had a nice, solid butterfly trade on. And it's one of the many ways to trade on Nadex. I'll do butterflies before the news. Sometimes I'll hop in directionally before the news. I'll do butterflies into the news. I'll do straddles and strangles into the news, and I'll do directionally after the news. I have 14 total strategies that I'm working on developing out piece by piece, putting the pieces together, depending upon market conditions, time of day, night, market that it is, and just having a whole news trading plan for, executing each and every day that there is a executable news trade that I can take advantage of. So what do we have coming up? All right, we got a couple things coming up that I use, so let's give you some useful information going forward. That was just a good educational piece for things that you can apply backwards there. But we have, let's see, a couple of the important tradable reports for tomorrow. We're going to have, Australia is going to have their interest rate statement. Okay, so the interest rate statement's coming out. They're expected to keep the borrowing cost at 2.75%. However, this could cause, a little move. And also, when they released the minutes on the interest rate statement last time, they mentioned the possibility of lowering the rate again. Now, I sort of doubt that they will lower it on this report. Okay? I don't think we'll be seeing the Aussie fly up as fast as it is today if they were going to do so. And, I mean, they got, nailed the other day. The Aussie just got nailed, so I think it's recovering from that big drop. And I think we were looking at that on the show, I want to say, on last Friday. But if I go back to daily bars here for a second. And I'm going to get rid of my deviations. Let's see here. Makes it a little... usually it follows with the following day going back down. So that's probably where we'll be looking is potentially for a weak Aussie going into this upcoming news that we're looking for tonight. So if there's any kind of statement, which if that reflects from the last statement that they made, that they may be lowering the interest rate, that means the Aussie is worth less. And not so much worthless, but worth less. there's a fine line there. And so we could probably be looking for the Aussie to be very potentially heading down on the two reports that are coming out. We got one coming out at 12:30. That's a very hand-packed. Obviously, that's the report. Now, if they do go in and they lower the interest rate, that would obviously be a massive sell on the Aussie. The expectation of them raising the interest rate, I don't have any of that happening at all. But they potentially could sell it. So they will probably leave it the same and give it a little bit more time before it finally just drops. Now, what kind of ranges are we expecting on this report right here? Looking at the Aussie dollar, it should be very flat, okay, going into the report. We're talking like 10 ticks, high to low range, 30 minutes before. Maybe like 15 ticks, 60 minutes before, and at most 20 ticks, about 90 minutes before the report. So you could go in, you could look at a variety of trades that you can do. One of the trades you can go in, so basically I don't expect anything going up to it. And a lot of times people go, well, what? Well, I can't. There's no binaries that expire at that time. They expire at 7, they expire at 11, they expire at 7 again. And so they don't think there's a trade they can do. But there is. You can go in and you can invert. Okay, you can do the opposite of what you'd normally think that you would do with the spreads. Instead of straddling the market, you basically can short the straddle, okay? Or basically put on a chart. It's going to look very similar to a iron condor. But you can go in because it has capped risk and it has a credit that you receive. And you could buy the spread that you usually want to sell, and you could sell the spread you usually want to buy so you could collect the premium. And you can do that for, like, say, since the report's going to come out at 12:30, you can do it for the 12 o'clock. And that would be about it, actually, the 12 o'clock. So you can get in as early as 11, and you can get in as early and then as late as 11:30. And so as 11, you're looking for maybe 17, 18, maybe 20 pips at most movement, high to low. So if you can bring in approximately 20 pips of premium collection. And the way that you do that is you go over here and look for negative break-even distance, okay? And let's see if we can just find any real quick on just the Aussie dollar. So if I buy something, usually there should be some premium built in. It should cost me a little bit of premium to buy it. So I shouldn't see a negative number on the buy side. If I sell something, the market should have to go down to break even because it cost me a little bit of premium. I shouldn't see a positive number on the sell side. So if I do, there really shouldn't be any profit there. Like right now I can see a positive number and there's no profit. Right now I can see a negative number on the buy and there's no profit, which means a negative number means the market would have to drop 9 pips for me to lose on my buy. There is a 10 pip positive sell, which means the market would have to actually go up 10 pips before I would lose on that sell. Now the issue is I can't make any money on it right now, so it wouldn't do me any good. But before an interest rate announcement comes out, there'll be a lot of implied volatility in there. And so you'll be able to go in and maybe be able to grab 5 or 10 ticks of premium going into the report. Now, after the report, we expect about a 45 pip move on average, and 67% of the time it breaks 50. So when it breaks huge. That's why that's why we have a 67% of the time it breaks 50 pips. But the range lately has been about 45 pips. So being aware of that range, then we're going to want to go in and have the different pieces together so that way we can bring in time collection. So look at negative premium. Okay? You want negative premium on the buy side. You want positive premium on the sell side. And that just basically means go to break-even distance. Let me zoom in right here on the chart for you. And right there. And you'll be able to see that and put that together. All right, we got a caller right now from Austin, Texas. So right here, local. All right, John, you there?
Yes, sir.
How you doing, man?
I never knew it could get this good. How about you?
Oh, man, same thing.
Exactly.
Can't complain.
Yes, sir. Buddy, could you, thank you so much for your show. You, everyone there, you all do such a fabulous job. The whole network and Mr. O'Brien, you all do just such a great job all the time.
You bet. Thank you.
KKD, would you mind taking a look and give me your opinion of that?
I'll do it. Let me pull it up right now.
Please.
Close this one out and open it up. Might even hop over to Thinkorswim for this one. Here we go. So are you long, you short, you trying to figure out what to do?
I'm thinking about getting in, but everybody there at TFNN, is saying that the market is going to go lower and pretty seriously. So
it'll go lower. You just don't want to get in before it does. I mean, Krispy Kreme is pretty good. People are depressed. They eat a lot of donuts, right?
Exactly.
So maybe it's one of those like sin stocks that does well. People go to Vegas and they buy liquor and they eat donuts.
That's what I'm talking about. Just stay drunk and be happy on sugar.
Exactly. All right, so over here looking at KKD. Ooh, man, that's a jumpy one right now. I would be in it, but I'd be about halfway to where my stop is. The way that I get in a trade, I get in like right above the previous bar's high, so I actually would have got in right here. Let me see if I can make that a little more visible. Give me like an arrow or something. Like right here, because I get in on the previous bar's breakout of the high.
Okay.
And let me show you where my stop loss would be, because this is what you got to be looking at on how the market moves. You're going to have to be willing to take that kind of risk.
Yes, sir.
Since it's already moved. You're sort of tracing the trade at this point. My entry would have been right above 1678, so like about 1681. I'd have been looking to get into the trade. And I'd be looking to take partial profits at 1668, so right before the high. Because a lot of times the market will go right up to those highs and then just drop.
Yes, sir.
Right? So I want to take partial profits. I'm going to move my stop to my original entry because it could easily pull right back down to about $17, really, to make it simple.
Yes, sir.
So it's about halfway into that move already. Looking at volume, that's going to be the number one thing you always want to look at. As far as like where's the stock going to go next.
Yes, sir.
And right here we see this massive high volume bar. I mean, just huge. Obviously, exactly. That's going to be based on earnings.
Like 12
but still, it shows a true reflection of agreement, consensus, and price.
Yes, sir.
So if we go over here and we'll just put a price level, look at the close or the high. Sorry, look at the high of that bar, and we're right there. Okay, so check this out. The market came back down. It busted up above that level. It broke below that level. It's basically, this has been a magnet price. You see that?
Yes, sir.
It's like the support resistance is almost hidden, Right. But it's if you see that volume bar, it's just right in your face. You can't miss it.
Yes, sir.
And to tell you the truth, I don't like buying at magnet prices.
Okay.
Because that's more becoming a consumer instead of a supplier. And what I mean by that is a lot of times as traders, we can get we can get stuck in the consumer mentality where when it gets here, I'm going to do this. Okay?
Yes, sir.
Which is what's happening right now. You're looking at it, you're like, I'm thinking about buying Krispy Kreme. And, so is everybody else. They're thinking about buying and they're thinking about selling. Because it's right at that major either support or resistance level. Which one is it? It's a support level if you think about buying. It's a resistance level if you think about selling it, right?
Exactly.
And this is the point where you actually want to be getting out of the trade, at least part of the trade. Okay. So like right here, if I was buying into this trade, this would, without even looking at volume, I'd like, okay, up here, this would be the maximum point I'd be looking to take some profit. But I'd probably be actually looking to take profit right about at this point because this is where everybody else and their brother is getting into the trade.
Okay.
And think about how many times you thought about getting into a trade And you're like, when it gets there, I'm going to buy or I'm going to sell. Right?
Right.
And it usually gets there, doesn't it?
Yes, sir.
But if it's 50-50, what happens when it gets there, right?
Exactly.
If we're honest with ourselves, okay?
Russian roulette, buddy.
Yeah, but think about it. You're like, probably, I bet you're 80% right about it getting there. Think about it.
That's true.
So, back up on your trades one step. And go, when it gets there, I'm going to do this. What do I do now to make money when it gets there? In other words, buy now and sell when it gets there and take some profit.
Exactly.
Become the supplier to where you know everybody's going to be getting in. Because naturally you want to get in there, so does everyone else.
Yes, sir.
And you'll be amazed at the impact that it'll have to start watching, trying to get that like one step back perspective. And wherever you get that hunch, to buy and sell,
yes, sir.
And you'll see fib levels, you'll see GAN levels and golden ratio levels and support resistance levels and these volume magnet price levels, all this stuff will all line up at the same point. That's where all the orders are going to be, because that's how everybody's trading.
Hey, buddy.
And that's where you want to start taking profit. So honestly, right now, I'm a stand aside. I wouldn't go either direction on this. If anything, I'd be taking some profits, because I don't like 50-50 bets.
That's good, buddy. Buddy, I so appreciate your time. I appreciate your expertise. Just all the best to you and your family, buddy.
Well, thank you very much. I really appreciate that, man. You have a great day, John, and just always good to hear from a fellow Texan.
All right, buddy. Take care.
Hey, man, you too.
Okay. Bye.
Bye. Yeah, so I'm from Texas. I live right here in Fort Worth, Texas, and son was born right here in Dallas, Texas, right here in Fort Worth, Dallas, Texas, and so I always love hearing from Texans, and went out and got me some new boots this weekend, so can't wait to break them in. Let's check out where the market is going right now before this last segment. Let's just see if there's been any major changes, and we'll come on back and look at a few more things. We got S&P still heading up, but it is really pausing up there. And I was looking at that this morning, just getting a lot of oscillation, checking out some butterflies, and it ran right up and it just stopped. And the other indices sort of looking to do the same. Let's go ahead and see if we can grab one of those charts that I had up earlier and start scanning through some of these indices. And I'll flip it on back over, and we'll pull that up and go in detail through the markets before we get done today. Come on. All right. Right when we get back, we'll flip through the indices. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. All right, so let's check that out over here. Looking at a one deviation move on the S&P. Moved on up, hit one deviation, closed above one deviation, has hit our stop. All right, so remember, if we go on up on the way that we use these deviation levels, and the one deviation is the one that we're always cautious about, most cautious about on the deviations, about not taking another entry, because it'll usually get pretty choppy right there at the top. So, you know, if, let's just say you're going long over here, we can go through all the details of the entry, but I want to focus right now on the deviation stop loss. All right, so it closes above 0.7. Excellent. All right, so it closes above one deviation. That's perfect. Now it closes at or below the next deviation right here. So we get right at that level. Okay? Now, that's considered, at or below is considered, if you're going up, it's considered below. And it closes above it again. Now we're tightening the stop again. So we're going to talk the stop when it closes above it, because it hadn't stopped us out by hitting down here. So we're going to tighten it up again. And it does this little oscillation thing, doesn't do anything, and then bam, hits it. So right here, we get hit on our trailing stop. Not a bad little trade. But what do we expect from this point? We expected a reversal or choppy market. So that would have put our stop, if we want to be super technical about it, would have been technically 14.75. That's really our breaking point. So you could put it a little bit higher, but to give yourself to have room to let your profits run. But at 14.75, like, game over. ES is done. Don't expect it to continue to rise for the rest of the day. We basically have got our move off of the announcement that came out this morning. So that's done. Move is over. Let's go ahead and check out the other indices. We'll go ahead and look at the NASDAQ. And we'll also pull up the broad market index, the net shares in the New York Stock Exchange. So we got that pump up. We sort of finished it off after the news, and then we just started trending on down. And it's working on, getting back to that open right there on the New York Stock Exchange. So we'll see if it keeps pulling on back down. But we definitely have the downtrend on the broad market index. We have had it since 10 o'clock. Hasn't been making any new highs. You see the same thing on the chart. It looks very similar, but it's sort of like looking at it is looking at all the stocks on the stock exchange at once. So it gives you a much better view, a much better picture of what's happening. We'll get on over to the NASDAQ. It hit 1, closed above it, hit 1.5 almost within a couple ticks. Haven't quite got there. Haven't hit our stop loss yet, but we did hit it on the NASDAQ. We did hit it on the S&P. And the broad market index is trending down. So that's a good clue not to keep buying. And again, we're past the 1 deviation, so use more caution. All right, so go on down here. We'll look down at the Russell. So in the Russell right now, we can see the market. And let's see, take us over that way. I can make sure that you're able to see the chart. Come on, taking forever. But we're getting each one of these charts up here. I just want to go through all the indices so you have them down. Now, also, let me go ahead and show you where to get access to these deviation levels, just in case you don't know. Inside, if you go to TFNN.com, click on Diagnostic Box Spread Analyzer, and one of the things you're going to get access to right away is our deviation levels. And you can click right here. They update every day at 8:15. We label for the Nadex markets, the Forex markets, and many of the futures markets as well. And so you know, like, what's one deviation. And I go through, I have some tutorials on the deviations and how to use them. And if you'll put these pieces together, then it'll add a massive piece to your trading arsenal, because right now you're probably not using statistics, and you need statistics as part of your trading plan. Y'all have a great day, and I will see you tomorrow right here on the Diagnostic Trading Hour.
Hi folks, I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.